Let's talk about NIO. This stock has dropped like a rock over the past year, but has it gone too far? In this video, I will look at the pros and cons of investing in NIO and find true value. First of all, I am bullish on NIO in the long run, but I do have concerns too, and in this video I will discuss recent developments and I will analyse the real possibilities that exist for this company going forward. I will look at the reasons for the stock dropping, as well as reasons why, and more importantly, when it will go back up, and by how much, in both the short term and the medium term. If this is something that you like, a YouTube channel that discusses both positive and negative aspects of a stock, so that you can get a real view of a company, then please smash the like button. If you enjoy my content and don't want to miss out, subscribe and turn on notifications so you will be alerted whenever I make a new video. Let me know if you've invested in NIO stock, what price did you buy at, or what price are you looking to buy in at? Now let's get into it. Why NIO is a contender and not a pretender. This article discusses why you can safely ignore those that compare NIO to XPeng and Li Auto. The company is getting positioned for a potentially significant 2022 run, and its production capacity could reach 600,000 by the end of the year. First of all, something that is commonly suggested is that NIO is a direct competitor with XPeng and Li. This is simply not true, other than the fact that they are all EVs. Now, I've spoken about this in a previous video. Each company targets a different demographic. NIO competes in the high end of the market and therefore deliver less cars than lower priced EV companies. Now, this is not just relevant to the EV sector. Think of traditional legacy ICE brands, for example. Who do you think has greater sales numbers? The likes of Ferrari or Lamborghini compared to Ford or Toyota. In 2021, Toyota overtook Ford as the leading car brand in the United States based on vehicle sales, delivering around 1.9 million units to US customers. That is just the United States and not even the rest of the world. Compare this then to Ferrari, who sell about 8,400 vehicles worldwide each year. But this logic applies to every industry. For example, who do you think sells more wristwatches in a year? The likes of a budget brand such as Casio or a luxury brand like Rolex. Comparing these is of no value. So why do people insist on comparing NIO to the brands that are operating in different market segments? NIO is operating in the luxury brand segment. In 2021, NIO sold its vehicles at an average price of $68,000, while XPeng sold in a range of $25,000 to $35,000. Instead of comparing NIO to these companies, NIO should be compared to its real competitors, which are the luxury brands such as BMW, Mercedes or Audi. And I have spoken about this in other videos, so I'm not going to go over it again. When the time comes that these ICE brands focus more on the EV sector, then these will become the real comparison companies. Guys, if you enjoyed this type of analysis, please smash the like button. It costs you absolutely nothing, but it helps me out so much with the algorithm and helps the channel get noticed. And drop me a comment. Do you think that NIO should be compared to other EV manufacturers or to other luxury manufacturers such as BMW or Audi? And if you want to support my work, check out my new Patreon page where you can get access to when I find new opportunities. Although NIO's figures for January of 9,600 was a year-over-year increase of 33%, it was actually down compared to December, and there is a number of reasons for this. First of all, while it might appear that the company is slowing down, what's happening is it has been revamping its production facilities in preparation for growth in demand for its existing vehicles, as it gets ready to launch 2 new vehicles in 2022. Add to that it's building out its battery as a service infrastructure, and you have a temporary situation that will drive extraordinary growth in the coming months ahead. Another reason that has been suggested is that Chinese consumers have been rushing to book their new EVs before the next round of reduction in China EV subsidies from January. China's EV subsidies were reduced by another 30% in 2022 before being completely phased out in 2023. It means that new EVs will have become far more expensive this year. NIO said that buyers who had paid a deposit on or before December 31st and are taking delivery of their purchases before March 31st can still enjoy the subsidies under the 2021 plan. And I would assume that this will be the same for Li Auto and XPeng. Because NIO targets the premium segment, the impact on sales should be less pronounced, but I think that this could be a big factor in the huge growth figures of the 2 budget brands in Q4 and in January. By June 2022, the company should be able to produce 300,000 vehicles, while by the end of the year that should rise to close to 600,000. Compare that to the current 10,000 per month, we are going to see huge increases. And with NIO set to release a lower cost model later in 2022, when all of this comes together, NIO is going to be a significant force to be reckoned with. Of course, it wouldn't be fair to not speak of some of the risks. At the moment, EV stocks in general are taking a bashing right now, with NIO recently hitting its 52-week low of only $19 last week, and that could easily happen again. I will look closer at this in the technical analysis in a minute, so stick around for that. There is the hope that the chip shortages that have dogged the past 12 to 18 months will end in 2022, but if this was to continue, then it would cause huge production issues in general across a broad range of industries. Then there are the issues that everyone is talking about time and time again, such as China stocks, the Fed, delistings, interest rates, or a stock market crash. The market right now is affecting the big boys for the first time. Facebook, Amazon, Netflix, and PayPal dropping in the past weeks. For any investor outside of the top 10 or 20 biggest stocks in the market, then this crash has been going on for the past 11 or 12 months. This is not new. Looking at market beat, we can see that NIO is near the bottom of both its 50-day and 52-week range. Average trading volume is 57 million, but today is less than 2 million. This is not correct. Today's trading volume so far is 41 million, making NIO one of the highest traded stocks on the market today, and yesterday's volume was over 55 million. As we can see, the consensus price target is $57. While the most recent price targets were set within the past 3 weeks of $54 and $37, significantly, 86 Research have upgraded NIO stock from a sell to a buy. NIO is set to report its Q4 and full year 2021 earnings in March, but looking at the most recent financial statements, we can see that NIO has assets of 10.7 billion, liabilities of 6.4 billion, which is about 1.6 to 1. So the NIO balance sheet is very strong and has total equity of 3.8 billion. For the latest 3 months, NIO had revenue of 1.5 billion and about 3.5 billion so far this year. Given that the company's current market capitalization is about $38 billion, this gives NIO a price to sales ratio of about 7 to 1, which is quite good. NIO is expected to generate about $10 billion in revenues this year and $15 billion in revenues the following year. But this could be viewed as a low estimate given the level of growth expected, expansion into Europe, and the overall huge increase in production levels. In total, the current market cap of 38 billion, NIO has a future price to sales of only 3.6 and 2.4 for the following year, which is very low. Keep an eye on NIO's earning report, which is due on the 7th of March, where revenue is expected to be 1.53 billion and an EPS of minus 14 cents. I feel that due to October's very low deliveries, where October seen the lowest deliveries of any month in 2021, we might see NIO fail to meet the expectations, and this could see the price drop even further. But that would put NIO even further into deep value. Guys, if you enjoyed this type of analysis and detailed look into the stocks that I cover on this channel, please smash the like button. It costs you nothing, but it really helps with the algorithm. And if you want to support my work, check out the Patreon page where you can get access to when I find the latest opportunities. Looking at TradingView over the past year, we can see that NIO stock has gone from the highs of 60s right down to just $19 last week. This is a price that I did not see NIO dropping to so early in the year, but as we know, the market is crazy right now. In my opinion, I think that NIO is undervalued at the current price, but unless the market makes a sudden recovery, then I think that it is unlikely that NIO will return to anywhere near January 2021 highs anytime soon. Going by the current market trend, I feel that NIO is about to gain somewhere between 20 and 30% in the coming weeks. But if the market remains overall bearish, then NIO will probably drop down again as the year progresses. Although I feel that at $24 right now, NIO does represent great value, I do think that NIO will drop more before the overall market begins to recover, which I predict won't happen until Q2 at a minimum. In my opinion, anything between $17 and $20 should be seen as incredible value to get into NIO shares, and honestly, I don't see any way that NIO drops below this range, unless something incredibly disastrous happens on a global scale. So guys, that brings us to the end of the video. If you appreciate this type of content, please smash the like button and help me grow this channel. As I said a moment ago, I think that this is a great entry price into NIO, and looking at the charts, I feel that we are about to see a nice gain in the coming weeks, but overall market sentiment could pull this stock down lower as the year progresses. There is a lot of fear in the market right now, and two of my favourite investment quotes come to mind. From Warren Buffett: "Be fearful when others are greedy, and greedy when others are fearful." And from Baron Rothschild: "The time to buy is when there's blood in the streets, even if that blood is your own." And there is certainly a lot of blood in the streets right now. Remember, this is not financial advice, and I highly recommend investing only money that you can afford to. After all, it is you that will enjoy the gains or suffer the losses of your decisions. So please always do your own due diligence when investing. If you're new, subscribe, turn on notifications, and I'll catch you in the next one.